A big spike in Chinese gold demand is coming. So there's a lot of reasons why people in China would want to buy more physical gold. You have the Evergrande situation. You have problems with the Chinese banks that have all these loans out to Evergrande and Chinese real estate developers. The Chinese government and People's Bank of China are going to print if they have not already started printing. I've already heard from a number of sources that the bailouts and printing has already started. Anne Stevenson Yang of J Capital has already talked about the printing. She is a China insider, has lived in mainland China for many, many years, for decades, and has talked about the printing. Also, China's crypto ban for regular Chinese people, not Chinese Communist Party elites, and then the crackdown on Chinese technology companies and stocks, how Chinese companies cannot list on American exchanges. And then on top of this, you could have potentially real estate prices in many Chinese cities start to fall if the crisis in China does get worse. If the money printing and the bailouts and the QE in China do not work. There's already been reports of really bad stagflation for over 12 months now. The power outages started in November 2020. China in Focus YouTube channel was talking about this back in November 2020, and it's just gotten worse and worse with the factory shutting down, the shortages, the electricity problems of factories in China. But according to this gold analyst, Yiyi Gao, senior analyst at Metals Focus, Chinese gold demand is expected to pick up enormously in the not too distant future. He is forecasting jewelry demand to increase by 43% year on year, and investment demand to increase by 33% in the not too distant future. So China already imports around 100 metric tons of physical gold per month. That's China's private sector. We don't know the official Chinese government numbers, but anecdotally, there's actually really good videos that this guy, and I put screenshots there of some of his tweets. His name's Samson Lee. He's a commodities analyst with Willem Middelkoop, and he is sharing videos from some of his contacts in mainland China and some of the major Chinese cities of very long lines recently over the last month of people waiting in very long lines to buy a lot of gold jewelry, also gold coins and bars. So gold demand is starting to pick up rapidly again in mainland China, both in terms of analyst projections and then also anecdotal evidence where we have videos of very, very long lines of people waiting to buy gold jewelry in mainland China. Also, the China Construction Bank, which is one of the 4 or 5 largest Chinese SOE, state-owned enterprise banks in China, was just told by a Chinese government agency that they need to prepare a new gold bullion division. So I just saw that tweet out from someone who is in mainland China that I follow. He works in manufacturing, and the tweet was out in Mandarin, and he translated part of it. So China is laying the groundwork for even more physical gold to flow into the country. Also, the Indian Central Bank has been buying the dip on this paper price smash. There is another story I'll cover in another video later this week about how the Indian Central Bank is buying a lot more physical gold. I'm sure other central banks were also buying the dip when the paper gold price in US dollars was smashed. But we are starting to see some bullish contrarian evidence on the commitment of traders the last couple weeks. Last week's commitment of traders, which I have there on the screen, and then this week's commitment of traders is showing that a lot of managed money, which are the specs, which are hedge funds, are heavily net short a lot of gold futures contracts, and that normally means that the bullion banks are covering their shorts. So the numbers on the commitment of traders the last couple weeks are starting to show a bottom, because when the hedge funds pile in net short, that's normally a good sign that the short trade is getting overcrowded and that the bullion banks are covering. So we should see a bottom in the not too distant future. But there's a lot of comments here on your screen. I've taken screenshots from gold fund managers with analyst comments about how the Evergrande situation, along with other factors in China with the crypto ban for regular Chinese people, are going to actually increase demand for physical gold. So if there is a Chinese stock market meltdown, if there is a Chinese real estate meltdown, if the crypto ban is as bad as many people think in mainland China, this should all be bullish for gold demand in mainland China. And if you are interested in physical gold, my friend Joseph, who is a friend of the show, also a patron, he has a YouTube channel. He tracks it once a week. It is free. He looks at the best premiums for all the online bullion dealers for gold and silver coins and bars, including numismatics. That is Premium Tracker Silver Stacker. Again, that is Premium Tracker Silver Stacker, and that is free. If you want to take a look at that, he is a friend of the show. He's a good guy. I know he works hard on this, and he is a big time gold and silver stacker. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis than I provide in these short little free videos, there are over 180 articles, charts, and audio podcasts behind the paywall, including 30 new articles out in the last 15 or so weeks, all for the cost of a Starbucks cup of coffee, only $5 a month. I think it is one of the best deals out there. If you don't like it, you can always cancel, and no one in the space charges less than me for premium content. So there are a lot of articles about global macro, companies, and sectors. If you want to read my thoughts about the Kirkland Lake Gold and Agnico Eagle merger, that is the latest article. And hopefully in the next couple days, because my birthday is on Monday, I will be out with a uranium update. It will either be a audio podcast for patrons or a brief article attached to it. Might be a combination of the two. Finally, if I could wrap up this short little video very quickly, we're seeing a lot of signs that physical demand is picking up in mainland China. There are a lot of positive analyst comments about gold demand increasing in mainland China. There are a lot of factors why. You have the crypto ban for regular Chinese people. You have the Evergrande situation. You have the bailouts and QE and money printing that the Chinese government and People's Bank of China are going to do to protect the large state-owned enterprise Chinese banks that have bad real estate loans out to Evergrande and other Chinese real estate developers. A lot of Chinese banks were already nationalized back in 2019. And there is a lot of evidence that central banks like India and others are continuing to buy the dip when the paper gold price is smashed. But the commitment of traders here in the US is actually, from a contrarian standpoint, starting to turn very bullish. I have some comments there from some analysts, Fred Hickey and another analyst, Gold Trends. This is from last week's commitment of traders, but this week's commitment of traders was very similar in terms of more hedge funds or specs or managed money going net short. So gold is starting to put in a bottom. Even though the dollar index is rallying, you could see the dollar index rally and the gold price rally if the stock market does have a big correction here in the US.